What is a 1031 exchange? I don't know. I'm just kidding. So what a 1031 exchange is, it pretty much defers your capital gains taxes on investment properties, right? What that means, so 1031 is a part of the U.S. tax code, or whatever you call it. I think it's section 1031 of the code, or whatever. That's why it's called a 1031. But anyway, so what happens is, let's say you buy a property, it's a rental, you buy it for like 100K, and then 5 years later, boom, it's worth like 500K. When you would sell it, you have to pay taxes on that gain, right? That sucks. You don't have to pay taxes on all that. That's terrible. So what you do a 1031. And when you do this 1031, you can buy a like-kind property and defer your taxes to a further point. So why this is so useful is you can keep deferring these taxes like your whole life, right? If you do this right. And let's just say you keep doing this and doing this, doing this and doing this, and then you're like 120 years old, you pass away, and you have all these properties and 1031s, and you leave it all to your family, and when they get it and they want to sell it all, you don't pay taxes on any of that, which is so sweet. But how a 1031 works is you pretty much buy, example, let's just say you sold it for 500K. You can't take the money, right? The money has to go to an intermediary, I think it is. And it goes to a special person that holds the money. You can't take the money is what, I can't think of the word, what it's called, but it goes to a special person. They hold the money and they put you on a timeline, right? And I don't remember if these are the exact dates, but they might be. So 45 days from the day of selling your place for 500K, you have to designate the property that you want to buy. And then from there, you have 180 days from the day that you close on the property you just sold to actually purchase that property. And if you do it all correctly, then all your taxes are pretty much deferred into your new building. Let's say you buy a new building for, I don't know, $1 million. And all that money is in there and it's making you a bunch of cash flow, and it's not, you didn't pay any taxes on it, right? And then let's say 5 years later, your $1 million building's worth $5 million. And then you do a 1031 and then you buy a $10 million building, and all of those capital gains, the $4 million, that gets transferred over, and you don't pay taxes, and you just keep going and going and going and going and going until you have billions and billions of dollars, and just everything's awesome, right? So 1031s are actually an awesome tool that anyone in real estate can use, mostly if you're buying and selling stuff and you have big capital gains, to help you. Obviously, talk to your CPA or an attorney or something to do it. I made this video because I've done a 1031 before, and it's sweet if you can find the right deal, right? Sometimes the tax savings you get don't justify overpaying for a deal, so sometimes you don't go through with it. But it's there as another tool that you can use as an investor to really scale your business, right? 1031s are awesome, awesome, awesome. And if you don't know about them, just type in 1031s on Google and figure it out. If you need I can't think of the word, the guy that handles the whole thing, a designator, whatever it is. I got his info that I've used before, and he was really great. I think he's out of Chicago maybe or something like that. But yeah, so I hope this video was helpful. And if you get a bunch of capital gains on your property, you should do a 1031 because it's awesome. Have a good one.